If you would put $10,000 into the S&P 500 back in 2000, that investment would have grown to over $75,000 today. However, if instead you would place that same $10,000 into gold, it would now be worth around $136,000. In other words, the so-called safe haven metal has more than doubled the return of what many considered the world's best businesses. But it's not always been the case. If we zoom back out in history, gold has not always been the king. From 1990 to March 2000, the S&P 500 returned 460%. Gold, on the other hand, actually lost a third of its value. So we're left with two very different cycles. A decade where stocks dominated and another where gold has led. We've been in that second environment for the past few years. But the question now is, what's next? To understand that, we need to look at one of the key macro forces driving gold. That is the US government's budget balance. In fact, this was one of the biggest reasons behind gold's underperformance in the 1990s. As we can see in the chart, from July 1992 to September 2000, the US government flipped its budget from a $300 billion deficit to a $240 billion surplus. That strong fiscal position boosted confidence in the US dollar, and global central banks responded by increasing the share of reserves they held in dollars. As demand for dollar assets grew, gold lost its appeal. Prices fell by a third, while stocks thrived on the back of healthier government finances and a booming economy. In the 1990s, as the US moved into surplus, central banks lifted their dollar reserves from about 30% to nearly 50%, while gold's share steadily declined. That steady selling became one of the strongest forces behind gold's weakness during that decade. Since then, the picture has reversed. Over the past 25 years, the US has consistently run budget deficits. When deficits are large and persistent, confidence in the dollar weakens. Central banks then look for alternatives, and gold becomes the natural choice. That's exactly what we've seen. While stocks continued to deliver solid returns, gold surged even more, driven by this steady shift in central banks' demand.